Hey, what's up guys? Welcome to another bull theory analysis video. Before we get started, I just want to remind you guys to check out the weekly report I just posted in the Discord. Also, be sure to check out the description where you can get up to $200 in free stock in Google, Amazon, Microsoft, and Tesla on Robinhood. And without further ado, let's just jump right into the video. And so today's video, I just want to go over a couple of key topics and a couple of key news events as to why I think price action is behaving the way it is. A lot of people think that price action follows a narrative, and some people think narrative follows price action, but I actually think they work, they coexist with each other, and they work at the same time, if that makes sense. I don't think one drives the other. I think that they both happen at the same time in terms of, okay, a specific news event can make the market drop very quickly, but then price action could also create news headlines, if that makes sense. So it's always good to be aware of both things, price action and the narrative and the news. And so just going over a couple of key things, pretty much recently we've had bank failures. One of the most notable of the bank failures has been, Tricolor, auto delinquency sort of thing, where JP Morgan's talking about cockroaches again, and some subprime auto lenders, and everyone's scared about 2008. Okay, great. But I think the main thing to take out of this one is I remember watching an analyst video, and he was talking about how the fact that auto lenders going under are one of the key indicators, or one of the first key indicators of a financial recession. So it's always the auto lenders, if that makes sense, that go under first, or that go bankrupt first, that indicate recession or a recessionary environment. JP Morgan on the news, talking about what I mean cockroaches. He's talking about how he thinks that there's people lending out to bad borrowers, and they have terrible balance sheets. So that's just one of the news events that's kind of circulating throughout CNBC, and you can hear them talking about, oh, we're talking about the bank's balance sheets and all these different things. It's important to keep this in mind, because I think a lot of traders, and especially new traders, like to get in too early, or they like to try to catch a falling knife. But remember, when narratives like this are circulating and they're kind of all over the news, it's kind of hard to buy a quick swing trade. What I like to do is just dollar cost average in times like this. Buying spot and not using leverage and not swing trading is probably the best thing to do. Remember, cash is also positioned, but I think that the best thing to do in these kinds of situations, where literally the fear and greed is probably some of the lowest points I've seen in a while, where we're at 11 on extreme fear. Same with the cryptocurrency market cap. In situations like this, it's better to just buy a spot. It's better to just buy a spot. I'm going to show you the charts in a little bit as to why it's better to do this. Yes, you can have a couple of swing trades here and there, but in order to maximize your risk-adjusted return, buying spot is the best thing to do in these situations when there's news events circulating like this, because you never know how low it's going to go, and you always just want a dollar cost average, save some cash on the side to be able to buy these dips. Okay, and so the next part I wanted to show you guys is pretty much just, again, there's another thing that's circulating around the news. The circular funding that is happening with OpenAI, NVIDIA, and AMD, and Oracle, and Intel, and XAI, and everyone's talking about, oh, it's a big Ponzi scheme, it's circular funding. Well, the first part that I want to actually mention is that venture capital and private equity firms, they've been doing this for 10, 20, 30 years already. But now everyone's scared because they're saying this is the first time. It's not the first time it's happened. They've been doing stuff like this. So again, I think it's a buying opportunity. When people say that it's a new thing, but then it's always been a thing, like say for instance, people are talking about quantum computing. Guys, that's been like the topic of Bitcoin since the very beginning. Everyone was scared. They weren't buying it because of quantum computing. They were saying that it was going to be able to hack the blockchain. And so now people are saying they don't want to buy NVIDIA, they don't want to buy OpenAI. Well, it's circular funding. Well, guys, they've been doing this for a very long time. They've been doing not maybe the exact same strategy, but circular funding has been a thing for a decent amount of time. I'd probably say ever since the dollar was depegged from the gold standard. So I'd probably say that's probably when it started to happen, and now it's just coming to light and people are seeing it. They think they're smart, and it's cool. It's cool to think that, but again, you want to be able to stay grounded and realize when the fear and greed is at 11 and people are talking about circular funding when it's been happening like this. I mean, this is one of the first times we've been able to see it mainstream on the news where everyone's getting scared. But again, guys, this has been happening for a long time. Stocks and Tesla and all these different companies have been borrowing from each other for a very long time. So don't think it's a new thing. Just blasting through these so I can get to the charts. There's been a new prime minister of Japan. I'd probably say this is maybe one of the biggest macroeconomic factors that's probably come into play, because I think it's larger than even the bank failures and circular funding, because this has to do with the carry trade. And so what investors are saying is that this new prime minister is going to release more economic stimulus, and that is also causing the bond market to freak out and Japanese interest rates to kind of become elevated. When that happens, people who've borrowed money from Japan, they're going to rush to sell their stocks because they think that interest rates in Japan are going to rise and go to 11, 12, 15, 20, 30% because they start getting scared. They think there's going to be a carry trade unwind because there's going to be more inflation in Japan. So just keep in mind, like there's a decent amount of bearish news right now. I don't think it warrants, again, a 12 on fear and greed. Like I am trying my absolute best to get as much cash as possible right now. I'm trying to get as much cash as possible to buy this dip, because I mean the same narratives keep coming back. It's funny to me when we've climbed the wall of worry for so long, but then the same narrative comes back. Like this Japanese carry trade narrative was here August 2024. At the very end of the month, everyone started freaking out because of the carry trade. Japan was raising their rates, which was, it is a big thing. So I won't say that I'm not going to sit here and say it's like it's not happening, because, this prime minister probably is going to release some more economic stimulus, and the interest rates in Japan are probably going to go up a little bit more. And obviously, Bitcoin can go down more. I'm not saying that Bitcoin can't go down. All I'm saying is that it's presenting a buying opportunity because it's the same exact narrative. If it was a different narrative, or if it was something fundamentally changed about the thesis of Bitcoin, or it's fundamentally changed about how we're viewing, the macroeconomic environment in terms of real estate and literally everything, like lending standards and all these different things, then I would start to get concerned. But for the most part, yes, lending is starting to tighten, but people are still buying real estate. People are still taking out auto loans. So it's not like, this is not like a full-on, complete and utter financial collapse, if that makes sense, in which I think it is presenting a buying opportunity, in my personal opinion. I think the risk reward is there. So just transitioning to the charts a little bit. Again, this is a perfect transition because, I know everyone's going to say we are in a bear market. And technically, you could say we're in a bear market. I was one of the firm believers of the 4-year cycle, thinking that it has to end. The cycle has to end on the 4th year. And that can be the case. I'm not throwing that out of the window, where it's obviously, it can go up, it can go down. I'm just making a joke. But literally, that's kind of where we're at right now. It can go up, it can go down. I'm not going to make predictions. It's really almost a 50-50 chance right now. What's funny about trading is that a lot of people say, oh my gosh, you're just saying it's 50-50. It's always 50-50. Well, the thing is that trading is a probability in and of itself. So what's funny is that when Bitcoin was up here at 113,000, the probability of the 4-year cycle continuing and blasting off to 130, 140 was probably 75 to 80% that it was going to happen. Now it's come down here to 87,000, the probability diminishes. And so it's all probability, guys. I think the probability diminishes with each $1,000 that Bitcoin drops from here. So it at 80,000, below 80,000, you know, the probability of us being in a 5-year cycle where Bitcoin pumps in 2026 probably goes down to like 45% or 40%. So remember, it's all a probability. And that's how you have to view trading. You can't view it as an end all be all like setup thesis. I know a lot of people like to use setups as a way to confirm their thesis and their bias. But remember, that specific setup that you learned from ICT concepts or whatever that you learned it from is a probability in and of itself. It's just a way to analyze probabilities. So if you use macroeconomic trading, if you use ICT concepts, if you swing trade, if you do all these different things, every single different type of trading style you're going to use is a measurement of a probability. So what I like to do is I just like to take it to the very, very simplest form of trading, Jesse Livermore or Stan Druckenmiller, where it's just the purest form of probability, where they're not looking at all these different liquidity sweeps and back testing and things like that. You can do that if you're a quant trader. That's great, but I like to keep it simple. I like to stay on the higher time frames, and I like to just analyze probabilities in terms of how the price action itself is moving and what the price action is doing week to week, month to month, year to year, right? And so that's kind of how I trade. And so in terms of the market right now, yeah, I like, it's funny because it's like people are gonna make fun of this thesis, but it's really literally a 50-50 right now. Again, up here it was kind of 75-80%, you know, but right now it's 50-50. Like, I wouldn't be surprised if we drop down to 65,000, and that's probably the bear market bottom, you know, because most of the time Bitcoin drops around 50 to 60% in bear markets. So in 2021, Bitcoin dropped to 15,000. That was a 77% decline. And if we have diminishing returns, assuming we have diminishing returns on each cycle, we'll also have diminishing losses. So say, for instance, Bitcoin only goes down 55%, right? Or 60%. And we go down to 49,000, or even 65%, and we go to 43. You know, if we're going to have diminishing returns, we're also going to have diminishing losses. I mean, this cycle, if this was the peak, this was around a 6 to 7x. It was 700%. In this cycle, and the cycle before this, the 2021 cycle, from the peak, from the bottom to the top, this was around a 15x, right? A 10 to, 12, 13, 14, 15x. So if we're going to have, again, diminishing returns, we're probably also going to have diminishing losses. And so I would say that we're probably not going to have, maybe we won't have a 77% drop. So I would shoot for maybe 55 to a 60% drop on Bitcoin. And then we kind of go from there. Like, even if we, hit that 47% mark, I really think that putting most of your cash in at these lows, at the $65,000 to $70,000 range, is probably the highest RR you can do. I would say the way I'm gonna do it personally is I'm gonna dollar cost average on the way down. 25 to 30% Bitcoin here, another like 10% right here at 74,000. And then probably the majority of it right here, maybe, and the rest, 60 to 70% I'd have out in cash. So that's kind of how I'm gonna do it right now. And I'm just kind of wait and see. And so yeah, that's kind of what I think of the market right now. And in terms of altcoins, the same thing. The same thing. I think risk to reward is actually highest with altcoins. I know people completely and utterly gave up on altcoins like Ethereum and ADA and specific things like this. But what's funny is that, I mean, it hasn't broken a pure macro structure. And what I mean by this is I'm actually going to show you a chart of silver, because I know this is kind of like, a lot of people are going to think it's stretching to look at a silver chart and try to compare it to altcoins. But what I will say is that whenever you see bottoms that occur in assets, right? And they are long drawn out bottoms, and it's kind of like a plateau in the price action where it's a again, I'm on the logarithmic chart, so it's very easy to see these logarithmic plateaus. If you're on a different chart, if you're not on the log chart, it's a little bit harder to see it the way I'm seeing it. But when you see plateaus like this, when you see rounding bottom sort of things, silver is one of the better charts that I've seen in terms of a rounding bottom where it just pretty much played out perfectly. Yes, it took years and years and years, and I'm not going to say that altcoins are going to, take years and years and years, but this specific chart, it took 20, 30 years for it to kind of play out. I mean, by the time silver was finally starting to recover again, this was, 2002 and 2003, and then it finally pumped up again in 2011. Recently, it bottomed out in like 2021, and it kind of did another rounding bottom sort of thing, and it pumped up in 2025. And so, again, it's funny to compare like commodities to crypto because they function differently, and they aren't specifically the same types of assets because they are fundamentally a different asset class. But charts are always it's like a language. Charting is like a language. And so when you understand a language, you can kind of piece specific things together, even if it's a different asset. Okay. So going back to ADA, I would say that it actually has a rounding bottom formation. A rounding bottom formation has historically been decently bullish. I mean, say for instance, we start to break lows of like 27 cents and we start to go to 10, 8, 7, 5 cents. Okay, yeah, that's a fundamentally horrible asset to invest in. You don't even want to touch something like that. But if we're holding lows like this at the 20 to 30 cent range, let's probably say it's a rounding bottom. East chart is fundamentally different, so I'm not going to say that it has the same sort of structure. But in terms of ADA, I'm actually using it as an indicator of the altcoins to kind of let everyone know that's watching this video. Remember, these assets that we're trading, like cryptocurrency, are fundamentally different than silver and gold and stocks because of the amount of time they've been trading. Don't ever count out the way a specific asset can trade, and don't put it in a box, because what I mean by this is that we don't have longer than, ADA has been around since 2017. That is less than 10 years of historical data of price action and trading. So ADA could literally, for all intents and purposes, or for all we know, ADA could literally be forming a rounding bottom and go up in 2027. We don't know what's going to happen. And that's the funny thing, is that that's the reason, yes, you want to use very fundamental things like the Fourier cycle, and like how altcoins always go up in the Fourier cycle at the end and things like this. And it's weird because altcoins haven't gone up at the end of the Fourier cycle. But don't count it out, because you never know what an asset's going to do. No one knew silver was going to pump like literally crazy after 10, 15 years. So for all we know, ADA can go up a year from now. It can go up 2 years from now. It can go up 3 years from now. At the end of the day, it's an asset and it has price action. So there's literally nothing you can do to change the fact that it can move differently than you thought it could move. I'll admit it. I actually think that I personally have put assets like ADA or Ethereum or Bitcoin into a box and said to myself, it has to behave a specific way. And in the past, I probably will say that, but I think that I'm kind of changing my mindset in terms of trading, because I have been studying Warren Buffett, I have been studying Charlie Munger, Jesse Livermore, Ray Dalio, Stan Druckenmiller. They all have in common is they always have a very, very strong thesis on an asset, and they don't tie it to a time. So I think I am going to, yes, I'm going to swing trade. Don't ever tie your thesis specifically to a time, because when you tie your thesis to a time, it kind of puts everything you're doing in a box. If you have very good fundamental analysis on that stock, and it has very good, technicals, key indicators. And don't put it in a box and say if it doesn't go up in 4 years, then it's game over. Now, if it doesn't go up in 10 years, 20 years, then yes, you're cutting into things like opportunity costs and things like this nature. And so, but when it comes to just the basic core principles of trading and investing, don't put the asset you're investing in, especially if it's a good one, into a box. And in terms of this market environment, yes, I think that it's very, very high likelihood that the cycle is over. I would probably say it's a 50-50 chance right now. But again, I'm not putting any of these cryptos in a box. And I'm not going to say that the cycle is over right now because it always has to happen this way. Again, we've literally had less than 10 years of historical data on things like ADA and Ethereum. Bitcoin, it's been around 14 to 15 years, but even then, that is baby numbers compared to the 100 to 200 to almost 300 years we've had of historical data of the Dow Jones, the S&P, and literally the indexes, because you cannot. I mean, there have been assets that have come and gone throughout history that no one has even talked about ever again because it just went to zero. Like literally, like you cannot put an asset in the box. It can behave literally any way. There is no telling what it's going to do. So all you can do is assign probabilities through price action and through historical data and through the news. That's all you can do. And if you can do that, you can say, oh, hey, I think XYZ stock or I think XYZ crypto is going to go up. And I think it has a 75 to 80% chance of going up in the next 2 to 3 years. That's all we're doing as traders. We're not literally saying, oh, we have a crystal ball, I know it's going to go up. You can't do that. Because, and as some people will say it's gambling. Some people will say, oh, you're trading off probability, that's gambling. Dude, literally everything in trading, newsflash, it's all gambling. Like, I'm not going to like sit here and say I'm a gambler. But if you buy a business, you're by definition gambling. If you buy a real estate property and you have expectation of it going up, you're a gambler. The definition of gambling is to buy something with an uncertain outcome and an expectation of profit. That is gambling. So everything in trading and in life in general is gambling. And so if you can assign the highest probability to a specific asset class and you say it's going to go up 75 to 80% or 90% up, that's a great trade. That's a great trade to me. In my personal opinion, I still think that ADA has an 80 to 90% chance of going up. And over the long term, I still think that Bitcoin has an 80 to 90% chance of going up over the long term because they haven't broken macro structures. They might have broken microstructure for the 4-year cycle itself, but they haven't broken very long-term macro fundamental like structures where it's like, okay, if ADA drops below 21 cents, that's kind of a trash asset. You don't want to invest in something like that. That's literally just losing money over time, right? Just completely and utterly going to zero over time. And so if in 2 years you see a rounding bottom on ADA and it's like, oh, it's literally at 20, $15, $10 in like the next 3 or 4 or 5 years, it's a great asset. You can buy that and hold it. It doesn't have to be 4 years. It doesn't have to go up in 4 years. And yes, again, there are things like opportunity cost, but it doesn't always have to be, it has to go up in 4 years or else I'm not buying. Don't put yourself in a box like that. And so anyways, to wrap up this video, that's kind of what I'm thinking in terms of the market right now. I am pretty much not going to, I'm not going to sit here and act like, we're probably not entering a bear market because there is a very, very, very high probability we're entering a bear market. And if that's the case, I'm going to be buying more and I'm going to be buying more real estate and I'm going to be buying more crypto. That's all I can say right now because the price action has to kind of present itself to me. I'm not going to start entering more swing trades until price action becomes favorable again. I mean, I literally entered 2 swing trades. If you saw the weekly or if you saw the trade entries and exits on the Discord, I entered 2 swing trades and I had a $200 stop loss on them because I was like, no, I'm not going to lose more than this because I'm not going to catch a falling knife. And so, yeah, that's kind of what you have to do in market trading environments like this. Sometimes you just got to take a step back and not really trade for a couple of weeks. And so what I'm doing is I'm currently, trying to look for real estate properties to buy. I'm currently trying to find ways to acquire more capital to buy the dip. I'm not going to stress myself on the market price action because you can't do anything about it. You just have to simply follow it, and you just have to assign probabilities to the price action and go from there. If you don't take anything away from this video, just remember, always zoom out, always look at the macro, study the higher time frames on the charts. Don't stay close-minded on the 5-minute, the 30-minute charts, and don't stay close-minded on specific news on CNBC. Always cross-reference, always have different theses, and make sure, most important thing you do is tie it all into the macroeconomic economy. If you cannot do that, it's going to be very, very, very hard for you to trade anything, because you're always going to be wondering, why is this happening? Why is that happening over in Japan? Why is this happening in Dubai? Why did the prime minister say this? Their geopolitics. Why is Ukraine fighting? Why is Israel? All these different things. If you can't tie it all together with the macroeconomic environment, like in terms of, Jerome Powell raising rates, hiking rates, the Fed, they're being bearish, they're being hawkish, they're being dovish, all these different things, you have to tie it in with that. You cannot trade without the macro. Yes, I guess you can, but it's going to be very hard. And there are specific traders that have their different styles, and they like to, trade without macroeconomic indicators. But in my personal opinion, that's just the way I trade, and I think it makes it very easy as a beginner trader if you just stick to how businesses work, why Amazon might be laying off employees, why banks are tightening up credit conditions, like all these different things that tie in together. You have to tie everything in. So anyways, I'm just going to leave it off on that note, and I hope you guys have a good week, and make sure you start to make so much money. Everyone around you realizes that, oh my gosh, you're making so much money, you buy real estate, boom, go. Okay, anyways, I'll see you guys later.